Monday, July 15th, market analysis, Stan Ehrlich. What an interesting weekend. And we always start out with the stock market indexes and then go to futures and occasionally, forex cycles, seasonals, same thing, sort of, sectors, crypto, variety of other markets. But today I'm starting out a little late, currently 10:17 California time. And in the E-mini, we have made a new historic high. That cancels out the reversal I got on Thursday of last week that in some cases made money, but not in the many other indexes, and some not. So now still in overbought conditions. I am waiting for another bearish engulfing. Strangely enough, we had three in a short period of time back in the latter part of June and two back-to-back in the latter part of May. So maybe we'll have a double or triple this time also. I really don't know. Those two were very unusual. Overbought, I think it's much too late to be buying. Obviously, people are thinking the convention is going to have something to do with what the market is going to be doing in the next 4 days. We'll see. I'm not a fundamentalist, sorry. So the 1 minute chart on the E-mini has already done a little slam dunk, but now real major damage until it starts to get close or in fact below the low of Friday. Now remember, that was a spike bottom because of some little piece of news. It's in all of the indexes on Friday. It looks like bad data, but it's not. Getting below Friday's low would cause me to be very excited about a second bearish engulfing. It's a long ways to go, but it can and has moved much faster and bigger before. Next chart, Spider, same exact story. Now here, I'm going to go into a little bit more of a story. It was back on July 27th of last year, end of July, when we had a bearish engulfing at the top of the, in this 2020 hindsight, top of the S&P 500 SPY, and it trended down smack dab into one of my favorite seasonals, the October lows, October 27th. The year before that, it was October 13th. And it was an extremely profound low with a bullish engulfing at the bottom, October 13th. So that was at least 2 years in a row. And I know it's been over 90% of the time since 1997 or 97, I think, we have had a buying opportunity of some significance, if not a huge significance, in October. So I will start talking now and then about the October lows until I think we're on the way down into the October lows. And that could start at any time, July, August, although it's usually September and goes down into October, a month or two of decline. This would be a little early, like last year, but it's the right conditions. Extreme overbought. We're getting sell signals, and sometimes I, get them on the way up and they're not the highest high, and then all of a sudden it is the highest high. Anyway, watch carefully the stock market indexes for bearish engulfings. We're looking now at the Spider 1 minute chart. It actually has made a minor new low for the day a few moments ago. So we could be on the way down to something. The QQQ did get above yesterday's high, did not make a new high for the trend, and came extremely close to a bearish engulfing ER sell signal on Thursday of last week, but it didn't make a new historical high or a higher high than the previous day. So there was no bearish engulfing. It just missed by a hair, but that's it. A miss is a miss. Okay, I'm bearish. I'm looking for new lows, but I haven't pulled the trigger yet, so I shouldn't say I'm bearish, but I am expecting a bear move. Now we're looking at the QQQ 1 minute. I need a close and a low. I need a low and a close. I hope below yesterday's lows because we have been overbought within the allotted past few days. So I could get a bearish engulfing today. There will be a red sell signal. And that's not too far away on the QQQs. On the NASDAQ September contract, we did get a great sell signal at the top of the market on July 11th, Thursday of last week. And I'll show you in a moment. Well, I'll show you right now. We had a day trade profit that was excellent. Sold short at 2686, both the ER1 scalp and the ER1 overnight. And because of the size of the decline before the close, we not only got stopped out of our ER1 scalp with a great trade, but we also got out of our position trade because of the bounce and the extent that it got oversold. Now, going back to the ER3, relatively close to the high of Friday, the trigger got hit. Now, it closed with a little bit of a profit on Friday, but we've seen a strong rally today, and it got a little higher than Friday's high, but our stop hasn't moved yet. It is still 21,000. And if we close soft today, I'm probably going to start to lower that down by changing the kicker. And that'll make it the stop move a little closer, a little faster. So we're short. There's a little green trade line. It's green. That means profitable. And we're hoping for lower levels. Got the sell signal, got fills, everything working great so far, just not a lot of profit on the ER3 overnight position from Friday. Now the ER3 scalp did make a day trade profit on Friday, and there's a little dotted line right there coming down to the close of the market. Could have even done better. Next chart, the NASDAQ, there's our ER1s, and I don't have ER3 loaded on the 1 minute chart at the moment. We would have, I'm pretty sure, we would have gotten short right around in here, and there's the close. So there's a profitable trade. Then it was a little loss this morning, and now a profit again. Next, YM, the Dow Jones has a double top still. We are coming very dangerously close to a triple top, but the problem is the triple tops are about as rare as a snowball in hell. So where am I? Close to a triple top, overbought conditions, expecting it to turn down anytime. Maybe we'll see a rare triple top. Otherwise, blow through the highs, make new highs by a chunk and get extremely overbought, then turn down. I can't tell yet. I think it's about to turn down. Next, the YM 1 minute. Back and forth you go. Little 1, 2, 3, 4, 5 broadening top, but they don't really form very well in a few hours. They're usually weeks and weeks. But the price movement is there. There's your 1, 2, 3, 4, 5. And from this point, it's supposed to go straight down pretty much. It's supposed to. The Russell. Here is something brand new. Not only are we at 88 on the Russell, but we are a new high ground for over 2 years. Now, the Russell is extremely overbought, 88, and a 2-year new high since I think it was January, now April of 22, 2 years and a few months. But it's also approaching the top of the resistance area, which so far for the last 2.5, 2 1/3 years has stopped these rallies. This is an absolute candidate for turning around and starting to head south. That's another bearish comment. Not very many bullish ones in the stock market and indexes. And here is the 1 minute chart on the Russell for the last 2.5 days. Been climbing very, very strongly. Now, bonds. A little lower than Friday's low, not even Thursday or a few days earlier. Doesn't look like much. But the high on Thursday, when the other stock indexes also had some reversals, was the highest high for this rally so far. We are down a little on the day. I think we're starting to slip at least down to 118.14 to 117.15. Call it 17 and a half. Now, I cannot rule out something around 15 to 14. But first, let's start closing below the first support area. For the 10-year notes, it did make a new high for the trend, but we're slipping just like bonds. And I think coming very close to overbought, but not quite. We could also flounder and dribble back down to some support levels fairly slowly, not particularly aggressively. Now, the energies, crude, dipping back down a bit. No man's land RSI, 47. Anything in the 40s, 50s, 60s is pretty much no man's land for me. So, got overbought. Market almost had a bearish engulfing. Too bad. Hannah's topped out. I think it's going to challenge the recent lows and drop down to 79 and could even drop down a chunk more than that. Next, natural gas. We got a bullish engulfing buy signal on Friday, but quickly today we're stopped out of it right away because we made a low lower than the signal day. And based on your stop, you could have lost less than that maximum amount. Nevertheless, bad signal, we're out. Does not change the fact that we are oversold. So maybe we'll get another couple of days down, sharp weakness. But the double top formation that I've been talking about for weeks now is getting closer and closer to being fulfilled. And that minor downside objective is just a little bit below 2. And here we are at 2.212, a new low for the trend. So I think we are going to go down either very, very sharply and quickly to 2, or we're going to have a little bounce and then finally get down there. Heating oil. Coming close to oversold, not quite, but in a support area and is holding fairly well, not great, no reversals, and we are still short from the high day when it double topped out, sort of. And this is a great trade so far. Looking very, very good. Love it. Our stop is right there at the moment. 2.5403. It looks like you can go to another screen to find the exact number. Not really important. Locking in, quote unquote, locking in a nice profit over how many days? 1, 2, 3, 4, 5, 6. Next trade chart, gold. Overbought today for the first time in quite a while. Nearing previous topping out price levels, some resistance in general. I think gold is about to flip-flop back down again. We could get a bearish engulfing red signal today if it were to turn around and slide below Friday's lows. Next chart, silver. Came close to overbought, not quite. When it made a new high on Thursday, it closed back below the previous rally highs. Not particularly good. Dropped off on Friday. And then it's dropping off more today. So I think we've got a short-term top here. We're going to start closing lower, but the bigger picture. And now that I've got some evidence that the market is starting to slide, I am going to detail this particular formation. Just a second. Control 4. Very good. This, I believe, is a shoulder high. And there's my little markers. Good. Good. Now copy it twice because I'm going to copy it once, point out that that's the top of the market, and I'll put it more like that. And copy it so that I have one more over here. I believe, push this up a little bit, that this may have been the last shoulder high. If that's true, I already got the neckline for the last several days. Let's put the objective in the picture. You measure from the highest high of the pattern down to the neckline. That is called the depth of the formation. I also call it the stick. You drag the stick over to the day you think it might break out. Let's give it a couple of days. And therefore, the downside objective, to be refined a little bit later, is 24. Yeah, very close to 24. A little higher, but very close. This is silver. Let's see if this pattern pans out correctly. Lots of elbow room, lots of profit potential. Unfortunately, I haven't got any reversals. Next, yet, that is, platinum. We did get a reversal on the exact high day. Great. This is another precious metal with a head and shoulder top that's doing a little bit better than silver, and gold just doesn't happen to have it. It's got some other possible bearish formation. But platinum at the moment is down a little, not a lot. Attacked the lows of most of last week, bounced again this morning. If it closes below today's lows, it'll probably be closing below last week's lows also the same day, and becoming very close to the breaking out of the neckline, the breakout of the neckline, and very close to hitting a lot more sell stops by hitting previous lows for the last few weeks. That's an interesting combination. So sell stops right here, exactly where the neckline is. The concept is when markets cross the neckline, they're supposed to have a sharp break and stay down a lot. The lower, the better, the faster, and so on. This is kind of a setup for doing exactly that. Interesting. High grade copper. Overbought, topped out, came down to support, rallied. We got a bearish engulfing, but it didn't close that way. So we don't have an NAR signal on the close, actually. But it did get to overbought conditions, and it is down a chunk, and it is starting to make minor new lows. So I'm expecting completely a test of 4.33. Next, beans, oil, meal, corn, wheat, cattle, and hogs. Now, way before this market broke into new low ground for years, I mentioned that if these lows didn't hold, that was the one in February 29th, and this is our buy signal on April 19th, the exact bottom of the market at the time, and a pretty good rally afterwards. If those didn't hold, watch out. And that's exactly what has happened. On July 8th, the market started to make new lows for years. The next trading day, it stayed down, closed down, another big down day, then another down day. Let me zoom out here a little bit, or rather in, and wham, boom, boom, got oversold, stayed oversold, stayed oversold. We are even more oversold at 16. Now, one of my favorite thresholds is 10 and 90, or very, very close to them, but you don't see it very often. We are currently at 16. There's a chance that this could collapse more today and tomorrow and get maybe down to those levels. If we touch 10 on the RSI or lower, I'm going to start screaming that this thing is ready to turn around at any moment. Right now, I've only got very, very oversold, likely to turn around and turn right back up again big time. Why do I have this yellow line here? Oh, there's a minor support and resistance area that have formed way back in January of 22, 2.5 years ago. Not that important, but guess what? We're sitting on it right now. Come on, cursor. Here we go. And that's why the yellow line is right here. So maybe a little support, very oversold, 16.59 now, near the lows, prime target to go back up. Watch soybeans very closely for a rally back up to where? 1105, and could be back up to 1140. Next, soybean oil, dropped like a rock earlier today and has recovered reasonably well, but that's a new low by a long shot since the overbought condition and a move up toward resistance, but it topped out earlier than I thought it was going to because the double bottom formation had an upside objective in resistance, a hair above it at 5105. And now we've pretty much damaged that double bottom completely. So I am going to erase the breakout level and support and the minimum upside objective. And didn't work quite right, but at least there was a beginning and a follow through. So what have we got? This gigantic 2-year, I don't like it, head and shoulder bottom because it produces an upside objective of 92. That's right. It's too big. Normally, they're not 2 years in size. It's not at the bottom of a bear market, and normally it would be located at the bottom of a bear market. I have to agree, though, the body parts are there. The shoulder, the head, the shoulder is a little bit off timing, but not too bad. So there's not too much wrong with this, but it is acting correct, especially if we start to close above 50. That's going to be extremely interesting on a long-term basis. I think there's something else that's going to evolve here. I think maybe just big sideways or crashing down like the other grains. Excuse me, I'm expecting to see go lower. Meal, new lows a few days ago for about a month and a half or something. No, it's actually 2.5 months. Double top formation, we got a sell signal on the second high exactly on that day. Downside objective is 325. I've been talking about, well, since it broke out of the double top, and that was on May 30th. New low for the trend down today, looking great. What can I tell you? I have no problems with the way soybean meal is acting. I just would have loved to have seen a bearish engulfing on the day after the 4th of July, July 5th, Friday. It only tested resistance awful accurately. And then that's it, dumped, and here we go, down, down, down. I'm looking for a minimum downside objective of 325 and lower. Next, corn. We got a bullish engulfing on Friday. It didn't work. I see we just made lows just a little while ago than the low of Friday. So that kills the signal. I think we had a tiny day trade loss on ER1 on Friday, and it would be a losing trade on the ER1 overnight, almost assuredly. There's no rally elbow room to make any money based on where we got long, which is about here. 403 looks like is where the long positions were initiated. Okay, it didn't work. Wheat. New lows for the trend. Major, like soybeans, downside breakup. Also like corn, going back to corn. Remember, this was the breakout on corn a couple of weeks ago. Huge, multi-year new lows. So it's beans and corn. And I think back to wheat, we're doing the same damn thing right now. So 500 would not be a surprise. Lower than that would not be a surprise. I'm going to go back quite a while here. I think I'm going to go back 5 years. I can't find any support. There's nothing. I have to rely on oversold, overbought conditions and price movement. And we're getting down to 26, very, very close to oversold again. So sometime this week, I expect a rally, probably back up to 556, 556, and again, maybe 582. But I could think this could drop a day or two more very fast, very quick. Cattle, not much going on. A little rally last couple of days in resistance, neutral RSI 46. Can't really make a big decision here. If we start closing below 181.7, it's going to go down a chunk more. If it starts to close above 189, let's say, yep, that could turn out to be a very bullish situation because it will perpetuate a long-term, maybe we're forming a double top. But it's terribly big, and I don't want to talk about it that much right now. Last one, hogs, oversold last Thursday, popped back up into some resistance, and today just floundering around a little bit, slightly lower momentarily, no big deal. Back to the E-mini. Well, we're slipping here a little bit, ladies and gentlemen. We've made a minor new low for some time period. Let's look at a couple others here. Let's go to the NASDAQ. Yeah, okay. A little support is given way. A little bounce is in progress. If we keep chewing away at the last hour, 2 hour, 3 hour lows, we're going to end up making a new low for the whole damn day, which was Sunday afternoon. That's interesting because then things could start to fall apart faster and we're approaching that bearish engulfing. Keep your eyes out, like I said at the beginning of my YouTube today. Profitable trading to you. Thank you. See you tomorrow.